Ever wonder how the 2023 tax changes in Connecticut could impact you? As we wave goodbye to the old year and usher in the new, it's crucial to grasp the transformations in our tax landscape. The changes in Connecticut's tax code could have significant implications for your financial planning. Whether you're a resident or just someone who conducts business in the Nutmeg State, understanding these modifications is vital. So buckle up and get ready for a journey through financial jargon. Stay tuned as we break down these tax changes for you. To begin, you must understand the general landscape of the 2023 Connecticut tax changes. In the grand scheme of things, these changes are a part of an expansive effort to modernize and streamline the tax system in Connecticut. The modifications are designed to impact a variety of income groups and businesses in different ways. For the hard-working middle class, there's some good news. The changes aim to alleviate some of the financial burden they've been shouldering. For instance, there will be a slight reduction in income tax rates. This means a bit more breathing room in the monthly budget, which could translate into a more comfortable daily life. Small businesses, the backbone of Connecticut's economy, will also see some changes. The state is shifting towards a more progressive tax structure, which will potentially lead to lower tax bills for smaller enterprises. The aim here is to stimulate growth and encourage entrepreneurship. On the other hand, high-income earners and large corporations will see a slight increase in their tax rates. The goal of this adjustment is to balance the state's revenue and ensure that those with larger incomes contribute a proportionate share to the state's coffers. These changes are a part of Connecticut's broader economic strategy, seeking to create a fairer tax system, stimulate economic growth, and ensure fiscal sustainability. Now that you have an overview, let's delve deeper into each change. Now, you might wonder how these tax changes could directly influence your tax filing. The 2023 Connecticut tax changes can be broken down into three main categories: personal income tax, sales and use tax, and corporate tax. Let's dive into each one and explore how they might affect your tax situation. First off, personal income tax. The state has decided to increase the income tax rate for individuals earning over $500,000 and families making over $1 million. This means if you fall into these brackets, you'll be paying a higher percentage of your income as tax. However, those earning less will not be affected by this change. Next, we have the sales and use tax. The state has broadened the scope of services subject to this tax. Starting from 2023, digital goods like ebooks, music, and online subscriptions will be taxed. So, if you're a fan of online shopping or streaming services, expect to pay a bit more for these digital luxuries. Lastly, the corporate tax. In an effort to promote small businesses, the state has reduced the corporate tax rate for businesses earning less than $100,000. This is a relief for small business owners, as they can now keep more of their hard-earned money. But wait, there's more. The state also introduced a new tax credit for families with children. This is specifically designed to offset the cost of raising kids. So, if you're a parent, make sure to claim this credit when you file your taxes. It's important to remember that these changes are designed to create a more balanced and equitable tax system. While some of us might have to pay a bit more, others stand to benefit from these adjustments, and there you have it. A simple breakdown of the 2023 Connecticut tax changes. Remember, knowledge is power. The more you understand these changes, the better you can plan and manage your finances. With this information, you are better equipped to navigate the 2023 tax changes in Connecticut. So, we've covered a lot of ground today about Connecticut's 2023 tax changes. We've delved into the nitty-gritty, highlighting the most significant shifts you should be aware of. From the adjustments in income tax brackets, the introduction of new deductions, to the changes in sales tax regulations, all of these modifications are poised to reshape the tax landscape in Connecticut. It's also essential to remember the increased estate tax exemption, a change that might affect many of you directly or indirectly. The modifications in corporate tax rates were another crucial aspect we touched upon. These changes are set to impact not just corporations but also potentially influence the job market and economy of the state. As we wrap up, let's not forget about the tax credits introduced, designed to offer relief to specific groups, fostering a more inclusive tax environment. Remember, staying informed about these changes can help you plan better for your financial future. Thank you for tuning in, and we hope you found this information helpful.